Welcome back. The strength in the market continues unabated. It still is a very terrific Thursday. There has been no sign of profit booking. The Nifty firm at levels of 21,150 plus. It's a 1.1% index move. Banks are going strong. IT is providing leadership. So these are the two heavyweights, the two pillars on which the markets are climbing higher. The Nifty Bank outperforming and IT providing that strength today. In the last 1 month, the Nifty has rallied 7.5%, while the mid-caps have seen a rally of 9.5%. And this is exactly the up move that we've seen in the last 1 month. Hard-pressed to find too many losers, but there are a few oil marketing companies which are subdued. So HPCL, BPCL are down nearly 1%. You've got Power Grid weak after UBS came out with a sell note on the company, and they believe the power generating companies, especially NTPC, have a better outlook versus transmission companies like Power Grid. HDFC Life right now is your top Nifty loser, and some correction in auto names after the record rally that we've seen since the beginning of the year. So Hero MotoCorp and Maruti in the red. But Taher Badshah is now with us on the show from Invesco Mutual Fund. Taher, this appears to be a bit of a Goldilocks scenario for India. Macro stability, political stability, and now you've got global optimism. Do you expect markets to remain firm, or do you think there are signs of excesses in the markets at current levels?
Well, Reema, I would like to think that actually we will continue to probably maintain strength. At least I would, the best judgment that I have about the market as far as 2024 is concerned is that I see much of the returns actually getting front-ended in the first half of the year or in the first 4 or 5 months of the year, and then we probably get into a bit of a pause mode, both at a global level as well as in India. So I think in the second half is when probably the markets will start contending with the reality of what is the benefit of the rate cuts, which will probably come about in the most likely come about in the first half of this or first half of the next year, and what is the implication for that on the real growth in the economy. I think that is what will be witnessed and what will be challenged and debated in the second half. But I think the markets essentially will in the first half reflect the positivity, the fact that probably after this better clarity on interest rates, the path of interest rates, more money will probably move to risk assets, both in India as well as globally. So I think that is the best estimate or forecast that I can probably have for the market for the next calendar year.
Got that. Do you think markets will top out around election results time?
Well, I think it remains to be seen as to how much we traverse, what is the distance that we cover. If let's say we get to the level of what 24,000, 23,000 is when we'll probably see the Nifty trading at somewhere around the 22, 23 times 1 year forward mark, and those valuations will always raise a little bit of flutter. I mean that we'll probably not have much to we'll somewhat be scraping the top as far as the valuations are concerned. Most of the macro positives would have perhaps played out by then in a way. So it will then all be up to earnings and how do earnings turn out? Do they turn out to be much better than the street expects, or is it in line with street estimates? I think that will probably determine the course of the market from there onwards.
All right, Taher, thanks a lot for joining us today. Since you are saying that up until the first half things look quite clear, how would you position yourself right now? Is there some sector that you would take a much higher exposure to, considering that this path seems pretty clear now? There isn't any major trigger also lined up, right? I mean, up until the elections.
So yeah, I think there are obviously certain parts of the market which have lagged, and the clarity on interest rates was perhaps not fully available up until maybe last night, and there was a fair bit of debate in the market whether which way it's going to go. I think with this clarity, I think a couple of the laggard sectors have something to cheer, particularly things like banks at one level. If I speak from an India's perspective, I think even for the IT sector at one level, while the sector has done well even in the last 2-3 odd months, but the only thing which was holding the sector back was essentially macroeconomic clarity. There was business around, there were deals around, and there was a good amount of pipeline of business for most of the companies, but execution was stalling. And I think if this is set to rest and there is a certain amount of economic clarity coming about in the US and in the developed market, I think it just enhances the prospects of these two, even for the IT sector as such. The other place where I probably see a benefit which is still not may have not been priced by the market is the low to the mid end of the consumption market in India. I think that has stalled as well in the last almost 1.5 years, coinciding with the rise of inflation and interest rates. I think that is a segment which probably can benefit incrementally from here on at the margin, if we see the more clarity on the path of a downward path of inflation as well as interest rates in India. So these are the two segments, which 2 or 3 segments, which I feel might have a join in the party in 2024.
So banks, IT, on the back of macroeconomic clarity and some certainty about the outlook, may change the client corporate behavior. And the third one is the low to mid-end consumption, which has been weak for the last, maybe 6 to 9 months. What about PSUs? PSUs have had a fantastic run-up, but they're still not expensive. So do you see value, or do you think the run-up is excessive given the fundamentals? And in PSUs, you have multiple segments, right? There are banks, there's railways, there's power. Talk about each of these themes.
So, in the at a very broad level, I think PSUs now, whether it be in any of these sectors, are by and large more of a growth play than a value play for us. They were value plays all along for the last good number of years. I think you're right that maybe compared to, let's say, the broad market valuations, they are still at they are still some kind of a discount. But to their own history, I think they're more or less caught up in terms of their valuations. Maybe some premiums as well in certain sectors. So I think for us, they're now largely in line with most other players in the market, where we are essentially trying to see as to what will be the intensity of growth. Within which, if I were to break it down, probably at the margin, and now given the clarity around interest rates, I think we see a somewhat upper hand for private banks compared to PSUs, the banking space, for the ensuing 3 to 6 months or in the first half of the year. And whereas in the other parts of the PSU space, which are more aligned to the real economy, or to the investment cycle, or to the manufacturing cycle, I think there is still could be a fair bit of appetite. We are still pretty positive on the way the investment cycle is unfolding in India. So I think, but there obviously you will have to kind of measure up to the growth of these entities, and how do they, how does government spending, etc., continue post now as well as post elections. So I think that's how we are breaking. That's how I think I would break down the PSU space at this stage.
Okay, Taher, I'm going to try to squeeze in one more question on, this entire slew of new listings that we've seen, whether it's a Tata Tech, IREDA, Flare Riding, all of these listing with those kinds of gains. Is there anything that you feel really stands out and justifies that kind of, big bump up? Is there any of those that, really stand out to you amongst the recent lot?
No, we have been participating in some of the IPOs, if not all of them, for sure. But we take it case by case. We obviously valuations is not easy in many of these, and therefore you have to somewhat take a longer handle, and also probably just focus on where do you think competitive advantages are likely to be a little more lasting. Because if that is the case, then you can live with a little more somewhat elevated valuations. But if you're not likely to see that, and yet you have to pay a very premium price, then that's something that we would ideally we would want to skip and give it a pass.
So, Taher, you said you participated in most, if not all of them. I know Tata Tech, Invesco definitely participated in. What else?
No, we didn't participate in Tata Tech for your information.
Oh, Tata Tech, you didn't. So then, which ones did you participate in?
I can't recollect the names. I would not want to call out names, but you will see it in our fact sheets. We have done a few of them in the recent past. So I wouldn't say that we've done most of it. I would say we've done some of the many which have come in the market in the recent past.
What about IREDA?
No, we haven't participated in that either. But we would have alternate plays in the market in those same spaces. So that may have been one of the reasons why we would have not participated in some of those names that you call out.
Got it. Thank you very much, Taher, for joining in. We need to slip into a very short break. On the other side, we'll get you excerpts from our conversation with Ramdev Agrawal on markets and more.